First, from an economic perspective, our friend John Najarian here at our New York studio, co-founder of Market Rebellion. Good to see you.
Great to be with you.
So this whole idea, I've said it a bunch of times on tariffs, again, exaggerated, I think, at the beginning. Market did go down in April, and then it came back. But there's been, some impact. The president says if he loses this case, okay, there's going to be a big impact. It's like life and death type of stuff. Right. He always says that.
Yep.
Is he right?
Well, he has a bunch of other possibilities that he could use other than the IEEPA that he's leaning on right now. He and his lawyers, I guess, would be leaning on that, which gives him pretty broad powers in terms of tariffs.
So you think he works around it?
Yeah, I think he would work around it. And for those, there were a couple say it's a tax on the American public and this and that. If it is, why are we not seeing that reflected in the inflation numbers? Because if it's costing the public more, why is it down to 3%? The inflation numbers that we look at, that the Fed tracks.
So let me ask you, let me challenge you on that for a little bit.
Okay.
So I would say the inflation rate of the country was about 3% when Trump came in, right, in January.
I thought it was higher than that.
The average was higher during the Biden years. That's what he always talks about. But I'm talking about January 20th of 2025. It was about 3. So it's about 3 now.
Yes,
so
sir.
the target rate that the Fed has is like 2.
2%. Yep.
Whether that is a new normal and we never get back to 2, different debate. But inflation is tracking higher than the Fed's target rate even now at 3%. So you could argue, again, tariffs not a disaster, but not helping with inflation. And that is a tax being partially passed on.
I got to give you credit on that. They are not, we are not seeing it take inflation down. And no one thought that it would. But we had Goldman Sachs, we had Morgan Stanley, we had so many of the big investment bankers saying, possibility of recession has gone from 20% to 30 to 50 to as high as 60%. None of that played out.
Now they're warning about market correction, which you see on the screen there, both David Solomon at Goldman and Ted Pick at Morgan Stanley. So if the economic projections didn't pan out, what about the market projections that this stock market maybe is run up a little too much and we're due for a correction?
Well, AI is one of the things that they always point to. Connell. They point to it because, of course, Amazon is cutting a lot of workers. Virtually every company that can is cutting a lot of workers, many of them white-collar jobs, not just blue-collar jobs. And why is that? Because AI allows them to do that. So that's the power of AI, saving these companies billions of dollars. I'm not applauding the loss of jobs and so forth, because we all care about our neighbors. But there will be an awful lot of jobs lost, and there will be some changes. It's not like I'm going out and saying, learn to code, you guys that, make the pipelines and so forth. I think that was tone deaf, and it would be tone deaf if I said it.
Right.
But I do think that there's a lot of possibilities for everything from the extraction of energy to renewable energy. And I'm not just talking for climate change, I'm talking because we need as much energy as possible. The president today said, we don't have enough right now just for AI.
Right.
If you project out just a couple years into the future, we'd use all that we have right now, and that would leave none of us with air conditioning, EVs, or anything else.
So you'd still bet on the American economy and the American stock market, broadly speaking.
I would.
You maybe on the tariffs that we were just talking about, is it fair to say not a huge change in what we're dealing with right now in the environment? Is that what you're kind of working into your projections?
Yes, yes. I think overall we will have some sort of a deal with China. There are tariffs on almost 50% of goods that are being imported into our country right now. How big those tariffs are and what the trade-off is for our goods going on the export side is what will be determined in the next 6 months or a year.
One more thing before you go. So just as you were sitting down, you were telling me a story about comments that you think are significant. A lot of people saw the movie The Big Short and the Michael Lewis book. That guy Michael Burry, who was in the book and kind of predicted the housing market downturn and bet against it and made a lot of money, is out with comments on, this gets back to our conversations, about stocks being overvalued. NVIDIA, high-flying AI company. Palantir, same deal.
Yes, sir.
Tell us the significance.
Well,
what do you say?
I think the significance here is he's a very smart investor. And he bought options, and I'm all about options, as you know. I trade stock and options,
right.
But options are a wasting asset. And he had the clock ticking, which means dollars are flying out of his account. He had about $1 billion position, but he didn't pay $1 billion for it. That's the trade-off with options. You can control you get a lot of leverage, but you get it for a small amount of time.
Okay.
In his case, he came out with his 13F filing 2 weeks early. Why would you do it 2 weeks early? Well, maybe because you want to get the ball rolling downhill. He is still underwater in his calls on Palantir and NVIDIA heading lower.
So the bottom line is you don't necessarily buy this.
I think he was saying it and putting it out there so that he could try to be the one to push that ball downhill. It worked for a day. It didn't work again today. They both bounced pretty severely.
Yeah, market in general, tech stocks bounced back today.
Exactly. So I think if this doesn't happen in the very, very near future for him, he's going to be out a lot of money on this trade.
Thank you, John, as always.
Thank you.
Talking about these issues and putting them in perspective is good for the audience.